Hey there! Welcome back to Crypto News, your source for fast, smart, and no-nonsense news from the world of digital assets. If you're here, you're not just watching markets, you're living them. Today's episode is absolutely packed. We're seeing global tensions shaking the crypto space, Bitcoin slipping near a key psychological level, over $1 billion wiped out in liquidations, institutions making power moves, and some truly wild headlines, including political fallout over crypto payments and a massive Australian crime bust. If you're serious about staying ahead in crypto, do yourself a favor. Smash that like button, subscribe, and hit the bell icon so you're first to catch every drop of alpha. Let's get right into it. This morning, Bitcoin slipped below the $103,000 mark, posting a 3% daily loss. And the reason isn't just about charts or liquidations. This is macro-level pressure. Overnight, reports confirmed that Israel launched targeted airstrikes on Iranian nuclear and military infrastructure. While the full scope of the operation is still developing, markets responded instantly. Traditional safe havens like gold spiked, oil surged over 2%, and crypto, being a risk-on asset, saw heavy outflows. Ethereum dropped more than 8%, falling below $2,450. Solana, Dogecoin, and Avalanche each posted losses over 9%, wiping billions off the altcoin sector in a matter of hours. The total crypto market cap slid roughly 6%, now sitting just above $2.45 trillion. But what's even more telling? Trading volumes skyrocketed, jumping to nearly $170 billion in 24 hours. This kind of volume indicates not just retail panic, but institutional repositioning. According to liquidation data, over $1.1 billion was wiped out across derivatives platforms in just 24 hours. Longs made up the majority of the wreckage, particularly those with high leverage on BTC and ETH pairs. It was a full-blown liquidation cascade. From a technical analysis standpoint, Bitcoin is now retesting the $100,000 psychological level, a key area of both previous resistance and now potential support. If this level fails, analysts are watching $95,000 and even $90,000 as the next downside targets. Bottom line? This is a real-time reminder that crypto doesn't exist in a vacuum. Geopolitical shocks still rattle the markets, no matter how decentralized our tech may be. Now, despite today's bloodbath, there's one segment of the market that's showing calm, or even quiet confidence. That's institutional money. One of France's largest banks announced it is launching a USD-backed stablecoin, fully regulated and pegged to the US dollar. What makes this move significant is not just the coin itself, but where it will live, on Ethereum and Solana. This is a major nod to public chains and decentralized infrastructure. The stablecoin will be fully collateralized by dollar reserves, held in regulated custodianship, and will comply with all existing AML/KYC frameworks. For many, this represents the future of fiat on-chain, legally compliant, stable, and programmable. Meanwhile, across the channel in the UK, regulators are revisiting a previously shelved idea, allowing retail investors access to crypto exchange-traded products. If this gets greenlit, we could see the return of BTC and ETH-based ETPs to one of the most mature financial markets in the world. And in the US, political winds are shifting. A prominent federal official recently stated that crypto assets are a necessary part of a modern portfolio and emphasized the need for clear, enforceable rules, not bans. Behind closed doors, there are whispers of something even bigger: the possible creation of a national crypto treasury fund, intended to hold strategic reserves in digital assets alongside fiat and gold. Taken together, these developments tell a different story than the charts do. While retail gets shaken out during dips, the institutions are quietly building. Let's switch gears to some high-drama stories making headlines today. In Australia, a massive crypto laundering network was dismantled in a sting operation that's being called the largest of its kind in the country. Authorities arrested multiple individuals, seized around $20 million in crypto and cash, and uncovered a network using privacy coins and mixing services to hide funds from financial regulators. It's another signal that governments are investing more heavily in blockchain forensics, and that the Wild West days are slowly coming to an end. In Eastern Europe, a political earthquake. A justice minister was forced to resign after revelations surfaced that he had received nearly $500 million local krona, equivalent to tens of millions in USD, in Bitcoin, from a known fraudster who is currently serving time. The crypto payments were reportedly made in exchange for legal favors, and investigators are now digging into whether other officials were involved. It's a scandal that could have lasting implications for crypto policy in the region. But it's not all corruption and crime. We're also seeing bold new financial plays. A well-known crypto influencer and entrepreneur has just launched a publicly traded investment company focused solely on accumulating Bitcoin. Their goal? To raise $750 million and purchase BTC as a treasury reserve asset, much like MicroStrategy, but with open access for everyday investors. This model could open the door for thousands of people who want exposure to Bitcoin but don't want to manage private keys or navigate crypto wallets. Today also marks a major Bitcoin options expiry, with nearly $3 billion in contracts closing. For those unfamiliar, options expiries often trigger price volatility, as traders hedge or close positions aggressively around key strike levels. And while majors are bleeding, one odd corner of the market is lighting up: meme coins. A frog-themed token, you know the one, jumped more than 8% today, driven entirely by Telegram hype, social media memes, and a potential airdrop announcement. No product, no roadmap. But this is crypto, and liquidity follows energy. Meanwhile, a few high-interest pre-sales are capturing investor attention. One pre-sale token claims it will offer 50% APY and distribute bonus tokens if Bitcoin crosses specific price thresholds. These kinds of incentives should be approached cautiously, but clearly they're getting attention, with over $10 million raised in less than a week. Among large-cap altcoins, XRP, ADA, and DOGE all posted losses between 5 to 9%, though network activity and developer engagement for each remain relatively strong. Also worth noting, tokenized gold products like PAXG and Tether Gold saw modest gains, reflecting investor interest in stability during times of risk-off behavior. With the market looking shaky and macro headwinds blowing, the big question is, what should crypto investors do right now? First, don't panic. Emotional trading leads to poor decision-making. Whether you're long-term or short-term, protecting capital is always priority number one. Second, use risk management tools. Stop-loss orders, position sizing, and portfolio diversification aren't just buzzwords, they're essential. Third, think long-term. The macro environment could shift quickly. If peace talks emerge or central banks lean dovish, we could see a strong rebound in risk assets. Technically, Bitcoin is still in a macro uptrend as long as it holds above $95,000. A successful retest and bounce from the $100,000 zone could pave the way for new all-time highs later this year, especially if institutional demand keeps rising. But if $100,000 breaks cleanly and we see accelerating volume to the downside, expect a pullback to $90,000 before new buyers step in. And that's a wrap on today's edition of Crypto News. If you found this update valuable, go ahead and smash that like button, subscribe to the channel, and ring that notification bell so you're always first to get the latest news. What do you think? Is this just a short-term panic or the beginning of a bigger correction? Are you buying the dip or sitting on the sidelines? Drop your thoughts in the comments. I read every single one. Thanks for tuning in. Stay safe, stay smart, and I'll see you next time with more crypto insights.